Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I'm Muralidhar Swaminathan. Joining us on this show today is Dinesh Rohira, founder and CEO, 5nance.com. Welcome to the show, Dinesh. As we were just speaking offline, markets are stabilizing a bit.
Yes.
And some kind of calm is returning to the markets. Let me now go straight to the query. Lalit from Bhopal has mailed us this query. He is 39 years. He started SIPs last September. That was the time when markets were kind of peaking. In Aditya Birla Sun Life Equity Advantage, Mirae Asset India Equity, SBI Small Cap, Aditya Birla Sun Life, Mid Cap and Invesco India Mid Cap, ICICI Proof Value Discovery, ABSL MNC and Reliance Tax Saver Fund. That's a long list.
That's right.
He aims to build a retirement corpus of 2 crores and he can hold for 15 years. What's your comment?
So I guess he's looking for retirement at about 55 odd years.
Yes.
Right. So my suggestion would be that he would need somewhere in the range of about 28,000 to be invested on a SIP basis per month. For the 16-year horizon that he's looking forward for his 2 crore corpus. Having said that, if I can request him to extend his horizon by 2 years, which means invest for some more, take it to 57 years, right? And then his need would come down to somewhere around 20,000 rupees.
Right.
So that's the benefit that a consumer gets in terms of compounding.
Holding it slightly longer.
Compounding. So it's only about a 2-year window that he needs to look at, and he's well within the 60-year range. Right. If he does that, then his SIP requirement goes down by at least 8,000 rupees.
7 to 8,000 rupees.
So
you are assuming a return of what?
Around 15%. Because his portfolio is largely skewed towards mid caps.
Okay.
While 15 years is a decent time frame to have a mid cap as a category.
Right.
I would have preferred he would have added some large cap as well. Looking at his age and the risk profile.
He should be able to absorb that.
But having said that, 15 years, 16 years is a decent horizon that he's looking forward for. So there's nothing to worry about it. The only fund, I think he has Aditya Birla Mid Cap.
Yeah, he does have Aditya Birla Sun Life Mid Cap.
Yes.
And
so what I would,
and also Invesco India Mid Cap.
Yes. So I think Invesco is okay, but Aditya Birla Mid Cap, I would prefer he has a reloc and does a distribution among other funds because he's got about 8 odd funds.
Right. Too many
mutual
funds.
fund itself is diversified and then too many funds is not a good idea. He may want to relook at the tax saver fund as well. After the lock-in period, it is not going to get any advantage for him. So he may want to move out of that and the Aditya Birla Mid-Cap Fund and distribute within the existing fund schemes that he has to consolidate around 5-6 funds. That is okay for him. He
also has ABSL MNC Fund.
So MNC funds are, so I would prefer if you do not focus on a particular sector in the long term, but MNC funds have been doing well. It would be appropriate for him to move out of the sectoral funds or the ABSL mid cap and the tax saver and distribute among the rest of the funds.
But do MNC funds still have a flavor? That's a very narrow thing, right?
I agree with you.
The risk is a little higher there also.
So traditionally they've been doing well, right? But are they going to do well over the next 15, 16 years is anybody's call. So I would recommend not to be focused on to a sectoral fund for such a large duration, right? He could look at a multi-cap fund in that
instead
place.
of
a Mirae Asset India Equity Fund could be a good one for him, rather than looking at concentration into a specific narrow focused sector.
Because sometimes, MNC funds, for the benefit of viewers, they will do very well in a certain period and for a very long duration they'll be absolutely flat.
That's right.
There's no movement at all. HUL is a classic example.
I was about to say that. Same thing.
HUL is a classic example. For 4 or 5 years it just did not move. It was stable and steady. Now it started moving, went up to 1800. Now it's kind of peaked out and corrected to about 1500, 1520. How long it will stay in that level is something it's very difficult to say. So if you really are looking for MNCs within the portfolio, I'm sure there are many funds where fund managers invest in MNCs as part of their portfolio.
So I think you should try and stay away from concentrated sectoral focuses or MNC funds. Also, for example, we have the cases of HUL as you mentioned. We have the case of Nestle that has happened. Right. So let's say if that happens in the last 5 years of his retirement horizon,
then the returns will come down.
Then you are in trouble. So stay away from all that concentration.
Next caller, Tulsidas is on the line from Mumbai. Good afternoon, Tulsidas. What's your query?
Good afternoon, sir. I'm a huge fan of this MS side of this show. Sir, I am 33-year-old.
Okay.
And my query is, I want to invest 5 lakh rupees for the period of 5 years and 1 lakh for the period of 1 year.
Okay.
And my next query, I have multiple objectives. My next query is I want 25 lakh rupees after 10 years. And 30 lakhs for my niece marriage after 20 years.
Okay.
And 75 lakhs after 20 years for my son's education. And I want after maybe around 2022, like 3 years for my retirement plan.
Right. Very, very, very clearly set goals that he has
correct.
got.
That's correct.
5, 10, 15, 20.
That's correct. The only submission that I would have to make here is that looking at the way he's set out the objectives, which is quite right, he needs to do a detailed financial planning with an financial advisor or a wealth manager, something like that, who can understand a little more details about how his work life and other elements are. For the first question, where he has about 5 lakhs of investments, lump sum investment, I would recommend him to take a combination of large cap, mid cap and multi cap, where it is invest about 1.5 lakh in SBI blue chip fund, about 1.5 lakh in Aditya Birla Sun Life equity fund, and he could invest about 2 lakhs in Franklin India Prima fund, which is a mid cap fund. This is what how he can spend. Spend about his 5 lakhs in investing in large
invest
cap
at one go in the current market itself?
I would say in the current market conditions, he could invest 50% right now. The value looks good at this point in time. And I would say the balance 50%, if he is looking for a 5-year horizon, right, then he should invest somewhere in around February, March time frame.
When the elections are there.
And then the risk, which may not be this year, of the budget and all, which will not be there because pre-election. But that's the time frame when he can look at, because post May, June time frame, the clarity on elections is there. And I do see that the market's going nowhere for the next 5-6 months. So he would be better off doing that. And the 1 lakh that he's investing for 1 year, then there's a small time horizon. So I would request him to look at for HDFC debt fund, small as short-term debt fund, because 1 year horizon I would not advise to invest into an equity fund at this point in time.
Absolutely. So very clearly, Tulsidas, the advice coming here, which could be applicable to other investors who want to invest lump sum, is that invest 50% now. The markets have seen a substantial correction of 20 to 25% for large cap stocks and 30 to 40% for mid and small cap stocks, and at the index level about 13 to 14% kind of correction that's happened. Now, in the short term, there does not seem to be much downside, assuming crude oil does not behave very badly and dollar does not behave very badly. The next opportunity, as advised by Dinesh, is that you could get the next opportunity again sometime during elections, or during the vote on account. This time it may not be a full budget. So you have the option of splitting the two, or if you think that you want to invest at one go and say, okay, this is the best I can get, the timing is not that
and
bad.
he could invest into the debt fund for that
the
period,
remaining duration of 2-3 months.
That's right. And then pull out from there and switch into equity.
Right. Tulsidas, you got the answer to your queries?
Yes, sir. So what about the long-term plan?
So he's looking at his goals.
His other, the 10-20 year plan.
Yes. So in terms of that, my advice to you would be to look at a financial planner to advise you correctly. But if I have to explain to you in short, if you can look at a 25,000 odd SIP to start with, and year on year you increase 5,000 odd rupees, you would be able to achieve some of the goals. But we would seriously need to look at what is your ability to spend that kind of invest that kind of money every year. Look at those goals, and some of the goals might need to be substituted or added with some of the loans that you might have to take, primarily because your investable corpus may not be appropriate at some point in time.
Right. See, slightly detailed planning, Tulsidas, you will require, but as suggested, invest a certain basic amount as SIP right now, which could serve for your 20-year goal.
That's
at least one goal is.
So the retirement goal?
Retirement goal you can start right away.
Yes.
Any specific funds you want to recommend for that?
So for retirement goal, I would suggest SBI blue chip from a large cap point of view, L&T mid cap and HDFC mid cap funds, and Franklin India Prima fund in terms of multi cap. These 4 funds he could equally look at distributing the SIP corpus.
Right. All the best with your investments. Save, invest and prosper. The next query is from PN Mohanty. He has mailed us this from Panchkula. He is investing through SIP 5,000 each in ABSL Frontline Equity, IDBI Top 100 Equity Fund, UTI MNC Fund, another MNC fund. He is also investing SIP of 4,000 in ICICI Pru Value Discovery Fund, 3,000 in Reliance Multi-Cap Fund and 2,000 in HDFC Mid-Cap Opportunities Fund.
Right.
He can invest for a period of 5 to 10 years. Okay. How is his choice of portfolio?
So would be good to understand what his objectives are. But having said that, about in 10 years time frame, he can look at closer to about 65 lakhs of corpus from what he's talking about 24,000 odd investment at this point in time. But primarily, I would again, as per the previous caller, I would avoid sectoral focuses on the MNC fund.
MNC fund.
And especially he's looking at a UTI MNC fund. There will be a better fund from Aditya Birla Sun Life. He still insistent on looking at MNC, but I would avoid doing that. Does he have any tax saver funds?
No, he doesn't have a tax saver. He has frontline equity, IDBI top 100 equity fund, Prove Value Discovery, Multi-Cap, Mid-Cap. No, he doesn't have.
So the rest of the funds are good. I would advise.
He has got two. Okay. No, he doesn't have tax saver.
Yeah, I would advise to stay away from focusing on to MNC funds.
Right.
Move into the mid-cap funds that he has. However, if he still wants to look at, then he might want to look at Aditya Birla Sun Life MNC fund.
The next caller is Vaibhav. He is from Allahabad. Vaibhav, good afternoon. What's your query?
Good afternoon. Sir, I am investing SIPs in Aditya Birla Sun Life Frontline Equity and ICICI Prudential Value Discovery and SBI Small Cap Fund in SIPs of 1,000 rupees each. And I have also taken a tax saver, Reliance Tax Saver Fund, through which I invest through lump sum whenever there is a fall in the market. And I have invested 2,30,000 in the tax saver.
Yeah.
My goal is child education and marriage.
Okay. You want to know how the portfolio looks?
Yes, how I know how.
So I would like to congratulate him. He's taking the decision at the right point in time at a newborn's life goals in terms of child education and marriage. That's what the parents are supposed to be saving in for. So good initiative. 3,000 rupees is good to start with. In terms of his portfolio, if you can just
ABSL Equity Fund, SBI Small Cap Fund, and ICICI Prove Value Discovery.
So I guess he's got a good mix of large cap, small cap, and value discovery. So I think he should stay invested in these funds. At 3,000 rupees per month, when his child is about around 19-20 years, and with the 2 lakh investment that he's doing, he should look at a corpus about 45 odd lakhs, 45-50 lakhs around for that amount for his child when he's 19-20 years, which should take care of some of his education initiative. But I would also recommend him to keep on increasing his SIP value as he grows to increase the corpus for his child. He would need some more money, I guess, and I guess he should be able to. The only one suggestion that I have in terms of the investments is after the 3-year lock-in period, he may want to move out of the tax saver fund. It doesn't share any advantage after that, unless he has a compulsion for tax saving purposes. And if he wants to look at, then he can look at a Mirai Asset India Equity Fund, a multi-cap fund for in place of the Reliance Tax Saver Fund.
And tax saving can also be done through SIPs?
Tax saving,
funds. Need not be a lump sum
investment. Need not be a lump sum.
Okay. Vaibhav, the advice coming from Dinesh is quite clear. Your choice of funds are good. The choice is very good. Stay invested with it. You will roughly look at 45 to 50 lakhs corpus over a period of 18 to 19
to 20 years.
19 to 20 years. And in case you are looking at a slightly higher corpus, you need to increase. All the best with your investments. Dinesh, thank you so much for joining us and taking our viewer queries. With that, it's a wrap on this edition of the Mutual Fund Guide. Stay tuned to BTVI for more news and updates.